Hi everyone, my name is PK. In this episode, I'm interviewed by Rahul Bakaya, the owner of Property Dollar, which is a prop tech company here in Australia. We discuss the lay of the land, the three biggest mistakes that people are making right now in this property market when trying to find locations and suburbs to buy. And we also talk about the Property Investment Accelerator, the genuine, honest review of what the Property Investment Accelerator has done and its pros and cons versus using buyer's agents. We also unmask the buyer's agent industry in a way that's never been done before. So if you're a new and aspiring property investor, seeing the bright lights and not sure how to progress, this episode will really anchor you so you don't make any mistakes and you take one step after another towards the correct way of achieving financial freedom. Hit the subscribe button, give it a like if you get value. Thank you so much, guys.
I know you've been very vocal about, doing your own research and over relying on the advisors. But what are the biggest risks you see when investors outsource their decision to others, especially buyers agents?
Yeah, sure. I think let me just preface this by saying that I know a lot of people with somewhat of a colored lens would perceive any answer I give as biased, but I'll try not to be biased and as objective as possible. I think the reality is that no one cares about your money as much as you do. And that even is true for me. I mean, right, I run a mentorship course, but even I'll admit, like, I don't care about X person's money as much as they do. I mean, that's just human reality. And so I really am a big believer that no one will invest in you. You have to invest in yourself. And therefore, the most important real estate is the 6 inches between your two ears. And the biggest risks are when people don't have that real estate fortified and vindicated with cold, hard data. You know, we make a lot of assumptions, unknowing assumptions. There's a lot of confirmation biases. Or let's say I live in Sydney, someone bought, my friend, let's say, bought in Schofield, made a ton of
Mhm.
cash. And it's like, okay, that's probably how property investing is. Or someone bought, I don't know, a house and land package somewhere, made a whole lot of money. Okay, well, I should just copy them or buy an apartment somewhere. And I'm
Mhm.
not saying any of those strategies don't have their place, you know, in the right time and in the right personal circumstance. But objectively looking at every single strategy in Australia, property investment strategy on a spectrum of passive to active, then objectively breaking down each strategy and understanding empirically using long-term data what makes this strategy successful versus what makes the same strategy fail for person to person. I think it's really important for people to have that grid, you know, different strategies, success versus failure. What is the data? What is the empiric evidence for me to download so that when I take action, I can make sure that my risk is low and my potential for return is disproportionately higher. There's always
Mhm.
risk with any strategy, but
Mhm.
a good investment philosophy is where you make a decision where you know the opportunity for return on investment is disproportionately higher than the
Mhm.
risk you face in making that choice. And I think
Mhm.
outsourcing, a lot of people do it in all sorts of industries of life. You know, no one really cuts their haircut, or at least I don't recommend you cut your own haircut unless you don't have any hair. But there are some industries where outsourcing is more risky than others. Your hair grows back, but buying a $500,000 property, get that wrong, maybe that money doesn't grow back. It's the most expensive decision you'll make. And so even if you do outsource, make sure you know as much or very close to as much as the person you are outsourcing to,
Mhm.
because they don't care about you and as much as you do, I should
Mhm.
say.
Mhm.
And they may not, even if they do care, they may not have actually analyzed this matrix that I was referring to. They may not
Mhm.
have the requisite knowledge. And how would you know that until you have the requisite knowledge? So kind of a long-winded answer, but I think that forms my investment philosophy.
Yeah, so you spoke about this course that you deliver, and I've seen in a lot of Facebook groups, they don't name names, and sometimes I've seen buyers agents posting there's these commentary around you can take this course if you want, but in the end, I've seen so many people taking this course and not actually making a decision. Do you think because you are empowering a lot of buyers with data, and dare I say it's sophisticated data, sophisticated methodology, because I think the way you put everything in context is quite astute, quite sophisticated. Do you think you get a bit of hatred or friction from buyer's agents?
When I started doing this about 7 years ago, buyer's agents tried to bury me. And the
Really?
reason they tried to bury me, they tried to bury my business model. And I
Mhm.
think the obvious reason for that is because it cannibalizes their customer base. And any rational business would perhaps react in the same way. You know, if you're running a successful buyer's agent, you have X amount of clients, and you own the content airwaves, which is what buyer's agents do. They've done it for a decade. They own the content airwaves of property in Australia. You know, just like in wartime, you know, let's go back to the Second World War. The public is influenced by the content that they hear, and back then it was all radio. So if you were in Germany, you're thinking Germany's right.
Mm,
If you're in Britain, you're thinking Britain is right,
mm,
etc. So for the longest time, everyone was fed this Kool-Aid that there is no way you can be successful by yourself. You must have a buyer's agent in your
mhm,
team. And it
mhm,
almost became a default decision. And the reason for that was because there were hundreds, and now there's more than 5,000 buyer's agents saying the same thing: podcasts, YouTube, books, Facebook groups, forums, etc. And then you have this one person, little old me, um, that says a different thing. Okay, so it's kind of like a David versus Goliath
mhm,
situation. And I fought against that, you know, year after year. And what happened is that over time, the noise from the buyer's agents, it quietened and quietened and quietened, not because of the type of content that I produce, but that does help when you just validate everything you're saying with data, which people can verify for themselves. Then, yeah, it makes sense. You know, it's like you can't argue with it. But the thing that really quietened down the buyer's agents was results. And, you know, we've had about 1,200 plus customers. They've bought 3,500 plus properties, saving themselves $50 million in buyer's agent fees. They made $1 billion in equity over the last 7 years cumulatively. And so
mhm,
when, you know, the industry sees this, then it's like, okay, well, we can't target the fact that DIY investing doesn't work, provided you have education. We can't target, you know, that this course is never going to work because it's working, you know,
mhm,
begrudgingly. So
mhm,
what angle do we come at it from? Okay, we still have to preserve our business model. We have to preserve our angle. We still have to own the content airwaves. So then you try pick it apart and you say, oh, you know, some clients don't get results. But the question I always ask is, how am I able to? And it's not credit to me. The credit is to the hardworking my members who work hard and get these results. You know, the question is, how are they able to buy literally every single day if it's not working, right? How, and it's, you know, this kind of all seems very salesy and, you know, like a pitch or whatever. But I mean, over the last 5, 6 plus years on my Facebook group, I've posted a client deal every day, if not every second day max. So you add those up, you get thousands of deals. And then you have people saying the course, oh, people aren't able to take action. Of course, there are all types of people. And there are some types of people who I alluded to before who want to outsource because they don't have time, but they don't want to outsource ignorantly. They want to be able to verify the
Mm,
decision that others are making, buyers agents are making for them, and for which they need education. So actually, I didn't know it at the time when I started doing what I do, but a whole bunch of people these days, they do my course and mentorship because they want to know as much as me, and there's nothing that I withhold, and they want to know as much, if not more, than the buyer's agent that they ultimately will recruit. And that way, the buyer's agent is the arms and legs. It's like expensive labor hire, but they don't
mhm,
have time. They don't even have 3 to 5 hours a week over 1 or 2 months. So they have to outsource, but they don't want to make a wrong decision. So this
mhm,
buyer's agent, they work for them. So that client of mine isn't able to make a decision by themselves due to a lack of time. And then they're able to be okay. Let's approach the situation with dexterity. Let's use a buyer's agent and get the result. And I have nothing against that. Therefore, I have nothing against buyer's agents. I
mhm,
think that everyone should be educated, and there's a place
mhm.
for both business models. And this hate coming in is really unjustified.
Yeah, look, hey, there's no way you can prevent the hate. If you're developing something that will change the industry, you will always get friction and hate. And we actually, from our own experience that at Property Dollar as well. When we first came up with the app, we also got hate. Some from buyers agents, some from the other agents as well. And we were saying that we are actually helping you folks, right? So, say for example, if from a real estate agent, if someone bought something from you and they're able to track their property portfolio in real time, and they think that the thing that they bought from you is actually working, when they have to buy their next property, guess who are they going to contact? You, right? And well, if your product is not performing, we got to be honest about it, right? And we have to be honest that people shouldn't come back to you if the first property they bought wasn't performing as you promised. And we do get hate as well, but eventually when the market understands, when there is enough education, dust settles down, and then people know everything. Having said that, this is not about Property Dollar. This is about buyers. And the other thing I wanted to touch upon is coming from the hatred to the industry now. We are seeing a lot of buyers agents coming into the market. Now, I'm not sure if it's a good thing or a bad thing. I personally wish it's a good thing. We need more buyers, we need more real estate agents, we need more mortgage brokers. It always increases competition in the market, and we don't want Woolworths and Coles kind of market in the property sector. But do you think, because what I was going through is that BA Institute of Australia has itself raised concern about how low standards in the industry are affecting. And if you had to set a benchmark, for what a good property advisor or buyer's agent actually do for the customers, I would love to hear that. But this trend where the barrier to entry is so low that uh, one day someone is an IT manager in a bank, and the other day they are a buyer agent, and then giving motivation, long motivation post on how to create wealth, which doesn't make sense because they don't come up with a lot of baggage of research and everything. What are your thoughts on that?
It's a really good opportunity to talk about it. I haven't really talked about this particular topic too much. I think, first of all, we have to acknowledge that, we live in Australia. It's a free country, I think, for the most part at least. And, capitalism this is how capitalism works. Anyone can do anything they want. And ultimately, it's hopefully through meritocracy, the best
Mm,
shine and get the best results for themselves and the people that they serve. Now, of course, the government's role is and should be to create some sort of hurdle or barrier to entry so that the
mhm,
consumer isn't ripped off in the process of capitalism working. And I think in the property industry, let's not just target buyers agents, let's also
mhm,
target courses, right?
mm,
Courses, buyers agents, there's almost no regulation. I mean, to become a buyer's agent, you have to do like a 1 or 2 month online course. Anyone can do it. You don't even have to have a high school education to be able to do it. I've done it myself, not to become a buyer's agent, but just to have a real estate license.
mhm, Mm-hmm.
And in fact, it's even worse for courses, Rahul. Like for courses, you don't even have to do that. So let's not
Mm-hmm.
pick on buyer's agent, let's pick on courses as well.
True.
And if it was up to me, I would suggest that everyone should need to have a 3 or 4 year degree in some relevant topic like economics or property or finance or some sort of adjacent subject. And in that way, you know that they're commercially astute and there's some sense of educational prowess behind them that doesn't exist, and nor is it regulated. In the stock, if I was in the stock market and I produced a YouTube video on buy BHB, I can't say that
Yeah.
unequivocally it's financial advice. But in the real estate market, as I understand it, I can say, guys, go out and buy in Bendigo. Not saying that you should do that
Mm-hmm.
blindfolded, by the way, but
Mm-hmm.
go out and buy in Bendigo. Buy in this specific suburb called Golden Square, random suburb I've just mentioned. Hopefully, prices don't increase by 50% because of this. But it's like it's not regulated, and
Mm-hmm.
there's so much property lobbyist groups that have intended this outcome, and the government is basically in their lap. And no one in the
Mm-hmm.
property industry talks about this because it's favorable to me to not talk about it. It's favorable to us to not create regulation for ourselves. But I think it's necessary because of the point that you've just raised, that 10 years ago, maybe there was 1,000 buyer's agents. Now there are probably close to 10,000 buyer's agents. And I think I have no disrespect for any of them becoming buyer's agents, because everyone should have an opportunity to do whatever they want, as an entrepreneur. But there
Mm-hmm.
should be some barriers to entry. And if there's not barriers to entry, once again, human tendency, you can't blame anyone. It's just our nature. Our nature is, oh God, I can make $15,000 to $20,000 by spending a few hours on my computer and buying someone a property. Like, who wouldn't want to do that? Like, let's not blame the individuals, IT professionals or whatever. It's like, who wouldn't want to do that? And
Mm-hmm.
so it's the system that's at fault, and unfortunately it's the consumer or the customer that suffers, especially because it's not boom times anymore. We're not going through COVID boom 2021. Nowadays, like even in Melbourne, there are suburbs that are still falling and some that are going up big time. But those that are going up big time, of them, some will stop going up big time and start plateauing out, and others
Mm-hmm.
will continue to rise. It's a mixed bag. And
Mm-hmm.
education and being prescriptive and doing your due diligence and having a experience looking at the data, not just following a single metric. All of these things count more than ever before. And a lot of the new buyers agents, and no blame to them, they simply don't understand all this. And therefore, I think they're well meaning, but unfortunately, in property, you might make $100,000 in 1 or 2 years, but ultimately, when the tide goes out, you see who was swimming naked. And I think there's going to be a lot of that.
Wow, wow. Yeah, that's a great great response. Also, what I've noticed, and one thing I have to give to buyers agents that they're very good at is picking up the technology, picking up the tools, which and then maybe concentrating too much on tools. That may be blessing in disguise, or that may be their Achilles heel. Why I say that is, what when I follow their content very closely, and what I see is not a nuanced argument or their own understanding of what is happening, but mostly snapshots of the tools. If we take out the tools from the equation, how would that affect the industry from a buyer's agent side?
That's a great question. Let me have a think about that. Like I think that, well, let's go back to when I started. CoreLogic had recently come into the Australian market
Yep.
just over 15 years ago. And the tools like DSR, I don't think were available. At least I didn't use
Mm-hmm.
them or know about them. And so I downloaded wholesale data from CoreLogic and ran my own analysis, right?
Mm-hmm.
And so the thing is, I would love to say that a lot of these buyers agents would fall over if there wasn't easy tools to use. But maybe, I don't want to be unnecessarily negative. Maybe a lot of them wouldn't, because like you said before, I'm not sure if this is a fair statement, but disproportionate to the size of the subcontinent's population in Australia is the buyer's agents who are from the subcontinent. And I think that's because the migrants inherently are ambitious and hardworking. I mean, that they've made all this effort and risk to come
Yep.
to Australia, and so they're the kind of the cream of the crop, you could say, at least from a motivation perspective. And
Mm-hmm.
so, of the buyers agents pool, I would say, you know, disproportionately more are from places like India than is representative of their percentage in the Australian population.
Mm-hmm. Mm-hmm.
And most of them, I think is fair to say, are from an IT background, right? And so IT people, numbers come easy to them.
Yeah,
They, even if they weren't
absolutely.
tools, they would probably make a way to
Mm-hmm.
analyze it. So I know where you're going with that question, but I didn't want to be unnecessarily negative. I think a lot of buyers agents would have no idea what to do if it wasn't for these easy tools that gave
Mm-hmm.
a score or a percentage or this or that, because it's really, that property investing is a science, but
Mm-hmm.
it requires a bit of mentorship. It requires, okay, there's numbers in front of you, but what is that picture? Like, what are they telling you?
Mm-hmm. Mm-hmm.
Um, and I think is a skill that can be learned very quickly, but you need a lot of hand holding and mentorship to learn that. And if you don't have that and you go head first in the property industry, especially if you're buying for others,
Mm-hmm.
there's like no accountability, then a lot of mistakes can happen. So I think that's how I perceive it. I don't know if that was very
Mm-hmm.
coherent.
No, no, no. That's, I'm here to listen to your opinion. Your opinion can be good, bad, right, wrong. It's all subjective. But I just wanted to hear your opinion on this one. Look, I'm very confident on, even if you say they are from Indian background, which is my background, I'm very confident on them picking a skill in 2 seconds if the tech goes away. But the way we see from the tech world is that it's only going to increase. It's only going to increase, and I'm very optimistic that this tech, the availability of tech, is not going to be just with buyers agents. It's going to go to end customers as well, and that would be very interesting to see. And when that happens, which brings to my next question, even like just picking up an example of Property Dollar, like we help people to track their loans, track their equity, track their portfolio performance themselves. What's your take on tech tools helping level the playing field for mom and dad investors or retail investors, if they are getting more empowered? I know from your side, it's more giving education on how to analyze your next move, analyze your strategic. But would that help you and the overall market if the prop tech world comes in and they give them tools like, now you have bought the asset, this is how you analyze.
Yeah, great question. Yeah, I think tech tools are fantastic. And I think, as with any technology, it's only as good as the user interface and
Mm-hmm.
how customer centric it is, how
Mm-hmm.
easy it is to use for the customer. I'm
Mm-hmm.
kind of a little bit old fashioned myself. I love tech, don't get me wrong. I think
Mm-hmm.
more the
Yep.
merrier, but I love a good old Excel spreadsheet as well. I like to kind of roll up my sleeves
Oh.
and get
Mm-hmm.
dirty in that way. So, look, I think the more tech reaches the end user, and I think it does. I think right now, the average mom and dad investor, let's say they're in their 30s, no experience in property, they have access to the same tech suite that
Mm-hmm.
a 10-year experienced buyer's agent has,
Yep.
right? There's no difference. It's not like there are special things that buyer's agents have that a normal investor doesn't have. And the great thing about it, probably because of people like you, Rahul, is that the cost of acquiring or subscribing to these tech assets is very, very low.
Mm-hmm.
We're talking hundreds of dollars, or even like my clients spend less than $200 on tech. Um,
Mm-hmm.
and it's not like you have to spend $20,000 and therefore, yeah, let's just go with a buyer's agent. It's an even playing field. It's very democratic. I think the key, as I'm sure you're doing in your business, is to ensure that that tech is digestible for
Yep.
everyone and people interpret it the right way. Like, for example, there's lots of uh, tech or SaaS products, like you mentioned a few earlier. And I mean, technology is kind of prop tech in the sense of sharing data on suburbs, LGAs, properties. I feel it's like a race to the bottom because there's so many coming online. It seems
Mhm.
every year there's like this new website that provides
Mhm.
data. And so I don't think the differentiator is data anymore. I think the differentiator is how you interpret it and understanding what it's telling you. And I think that is not
Mhm.
hard to acquire or understand. If you have a mentor or if you gain that education, it's a very easy thing to do, just like
Mhm.
gardening. You know, no one can really re-landscape their
Mhm.
garden themselves. But if you go to Bunnings, get like some tools, right?
Mhm.
A plow, this or that, then you can do it. Just watch a bit of YouTube. You can, all right, this
Mhm.
type of flower should be sown in spring. This one should be
Mhm.
sown, yeah, in autumn or whatever the case is.
Mhm.
So I feel property investing is like that. Technology is essential. You need to go to Bunnings, get the right equipment,
Mhm.
um, and then you can do it yourself with some education. And in terms of your angle and your question around managing a portfolio, I think that's probably one thing that property investors do least well. They think that buying property is the most important part. Of course, it is. I would actually agree. It is the most
Mhm.
important part, but then not too far in the distance, almost equally important is managing that property so you know that you're optimizing not only your one asset but your entire portfolio. Okay, well, when are we switching from interest only to principal and interest? Are we even doing that? When is our interest only periods expiring, and therefore do we have the finance, the household cash flow to survive, or do we need to plan that in advance with our mortgage broker to be able to refinance to another bank? Which
Mhm. Mhm.
entities mean that our cash flows are different? At what point can we realistically retire? I mean, it's not just a case of 10 properties in 10 years, everyone wants 100K passive income. Let's actually model all this so it's realistic, practical, and reverse engineered. And then let's hold ourselves to account to see how we're tracking. And there's always going to be curveballs. And so you need tech that can anticipate that, that can be flexible enough to model that. I feel that property investing is a lifestyle, and for any
Mhm.
lifestyle you need, I spend like 2 hours a month on my portfolio of 10 plus
Mhm.
properties, um, 13 properties, including my pre-PORs. But I think that 2 hours is like so important, and I feel sometimes people just don't do that because they don't have the wherewithal, they don't have the tech like you provide.
Mhm.
And then all of a sudden they get into a lurch where their property starts going down in value, or the interest rates go up and they're like, oh, this thing's costing me so much money, it's going down in value, property investing doesn't work, let me sell it and not do anything at all. And their
Mhm.
retirement's just gone down the drain.
That's a very interesting take. Now, while you were saying this, I think you should come to one of these prop tech functions or prop tech events. It would be really good because I think from the whole end-to-end journey point of view, in the tech space, I think you are the missing piece. I think once users who take your course, they know what are the yardsticks they need to keep in mind, what are the strategic narratives they have to keep in mind. And then when they go out and shop, and then they can use tech to manage their portfolio, whether it be property dollar, whether it be spreadsheet. I think spreadsheet is also tech. It's Microsoft,
Yeah.
right? Um, but important part is the strategy as well, and I think that's where you come in. Now, before we leave, I know we have only 6 minutes left. uh, I don't want you to give away all the tips and tricks of your course, but if you have to give our audience or investors and first home buyers maybe 3 tips or 3 things they should keep in mind, and specific, very specific tips to keep in mind when they are looking to buy their next investment property or their next property, what should they keep in mind?
I'll try to make it as relevant to like the current environment and the property
Mhm.
market right now. So I think the first mistake that I'm seeing a lot of people make is buying property just because it's cheap. Property market prices have gone up so much in recent times that there's a sense of, oh, I can buy in, let's say in Melbourne, in this western suburb for under 600K. That's a steal because it's like there's nowhere other place in capital cities I can buy for under 600K. And property doesn't go up just because it's cheap. And I know that has been the recent history. And I'd love to be proven wrong. Like I'd love for all these, well, I wouldn't love for it, but hopefully everyone who invests makes money. But the reality is just because it's cheap doesn't mean it goes up. That has been the case in recent years because of interest rate rises. But that's not historically how property performance has played out. So don't just buy something because you can afford it, thinking that everything will go up anyway. So let me just get on the ladder. Of course, don't buy something expensive thinking expensive properties go up faster than cheaper properties, but it all comes down to the individual demand versus supply metrics for that suburb and for that pocket within the suburb. So that's number one. The second mistake or tip I could say is don't buy where the majority of the content that you're seeing online tells you to buy. Of course, you can buy there. I mean, no one's stopping you. It's a free country. But oftentimes, like I found that by the time people find out about a location, because it's being talked about on the news or Facebook groups, YouTube channels, of which there are a lot these days, like that thing has already gone up 50, 60, 70%. Like I know some buyers
Yeah.
agents still buying in Armadale in southeast Perth, and it's doubled already. But they're still creating a narrative that, hey, it's still under 750K. Which other capital city can you buy under 750K with a yield of at least 4.5%? You can create a narrative behind any investment thesis in any suburb, right? You have to look through that and avoid buying just because there is a quote unquote expert saying it on a reputable platform like a podcast or a Facebook group. So I think that's the second thing. And then the third thing is, this is a little bit more sophisticated, so hopefully people will appreciate it. The third thing is that over the long term, markets always go to equilibrium. And what I mean by this is, I know that, let's say in 2021, 2022, when we started buying, my clients did in Townsville, a lot of people were saying, including some very big buyers agents, that Townsville property market won't ever rise swiftly in value because the council rates, but especially the insurance premiums, are very expensive there. All right. And that will be a deterrent to investors. Now, of course, hindsight, we have hindsight now, and the thing, all those clients have made like hundreds of thousands of dollars, doubled their money, et cetera, because over the long term, regardless of, small cash flow differences, markets always go to equilibrium. And the case was clearly back then in Townsville, to some extent it still exists, that supply was almost non-existent and demand was going through the roof because of a lot of changes the council had made from 2017 onwards. Anyway, I won't go into that too much, but et cetera, et cetera. And the same can be said for Melbourne right now. Of course, there are parts of Melbourne doing really well, but a lot of people are fearful of buying in Victoria because of land tax. And land tax is a bit of a killer. Like, it sucks. You're paying at least $1,000, $2,000 if you invest in property in Victoria. And people think that that makes Victoria uninvestable. But once again, there are locations within Victoria, both in Melbourne and regionally, where supply is now really, really dried up. When I say supply, I mean, release of land, zoning, building approvals, commencements, completions. All this is quantifiable. And demand is now starting to increase, not just because of investors, but because of first home buyers. And, yes, land tax hurts, but markets always go to equilibrium regardless of people making a big deal of $1,000, $2,000, $3,000 this way or that way. And so I think, keep the main thing, focus on the big rocks in the jar, and everything else takes care of itself. And that's really what my clients do, what I teach my clients. And the reason that we're buying in Victoria in
Hmm.
many instances, and why we bought in Townsville and why we bought in Perth, despite everyone saying it was a mining town back in 2021.
Awesome, awesome. I think this is the wave of Victoria, and but I still think that people need to be, as you said, very careful. They're not buying the whole Victoria, so they just need to be careful on picking up the right suburb. And what if people have to apply for your course? How do they do that?
Um, I really suggest don't apply for my course. Like, I really
Hmm.
suggest everyone, if they vibe with, what I'm on about, like, check out my YouTube channel, which is
Hmm.
Australian Property Mastery with PK, and check out my
Hmm.
Facebook group, Australian
Hmm.
Property Mastery with PK. I gotta live what I preach. So I don't
Hmm.
want anyone to make a decision on buying a course
Hmm.
without also being sufficiently educated to assess whether the course is legit or not. And so you can't really assess that by just going to my website, which is going to be plastered with good news
Hmm.
stories. You got to
Hmm.
follow me, get to know me, get to build trust in me,
Hmm.
interact with my clients without me as the middleman. The truths come out. You can't
Hmm.
hide when you have 100,000 plus community. So do that first, take your
Hmm.
time, do your due diligence, become educated, at least to some extent, to be able to see if I'm a scam or
Hmm.
not. And then,
Hmm.
if and when the time is right, check out the website, which is consultingbypk.com.au.
Awesome. PK, thank you.
It's my pleasure, Rahul. I think I see sometimes your comments on different Facebook groups, and I think you're a real flag holder for the truth. So good on you.
Thank you so much. Thank you. Much appreciated.